videos, you did predict that this decline was coming. Here we are bouncing back today. What number are you looking for? What fundamental indicators should we be on high alert for in this kind of uneasy climate, if you will?
Yeah, Lori, this is a typical, it's a routine, it's a healthy, normal bull market correction. This bull market remains old and wrinkly, but I don't think it's dead quite yet. I think on balance, first of all, yesterday's low should not be the low. We should have one more leg down this month. The round number, 1,700 plus or minus a few percent. That's the 200-day moving average. It's also a technical measured move. It doesn't really matter. We need one more leg down to restore the wall of worry, to give us some of the necessary fear, get a little more selling done, a little bit of panic in the public, and then I think you build the base for a rally into the spring.
Okay, Paul, it's Adam Shapiro here. Help us understand, there are two things that seem to be in conflict here. First, you talk about the strength of of NYSE's cumulative advanced decline line, and the trend is still going up as an indicator of the bull market will continue. But then you've got this flow back into junk bonds as people are chasing yield. That would seem to be in conflict with each other. Help us understand it.
So before a bull market ends, and I say typically or usually the NYSE advanced decline line tops out months or quarters or even years before the overall stock market does. The advanced decline line just made an all-time high in December. So that's not a warning sign yet. And junk bonds are so sensitive to the tiniest little ripple in the liquidity stream. And junk bonds, which were left for dead after the Fed announced the possible taper last May, have sprung back to life. So they normally top out before the stock market does, and they just put in a peak. So just those two ingredients, forgetting about how strong banks were until just a month ago, and the semiconductors, how strong they were. So the ingredients necessary to end a bull market are not there yet. From my view, the next opportunity would be this market puts in a bottom this month and then has another rally to all-time highs. If we don't see those things confirming at the next all-time high, I'd be more concerned. But right now, I think you have a garden variety 10% decline.
So sounds like besides buying the VIX, if you want to invest in the volatility as a tool in and of itself, should you go defensive? I mean, there's still a lot of cash to play with out there. What do you think? What should my risk profile look like?
I'm not sure I'd be running to buy the VIX right now. I think the real time to buy the VIX is 15 or lower, and we're not seeing that. VIX just spiked on Friday. It's coming off today. And today is such a sucker's rally. When you close at the lows the day before and the market opens up and runs all day, that's not really good bottoming action. That's the bulls literally hanging on and almost praying that, and yesterday was it. So in this environment, I probably wouldn't play the VIX right now. If the rally lasts another day or two or three and you get it back down 14, 15, you probably have a better risk-reward trade, but I don't think it's now. In fact, you want something to play that may be a little lower on the volatility side. We're long Treasury bonds, which is maybe it's our biggest position now. I mean, that's where I think you have a little bit more risk-reward left until the equity market does bottom.
And you've been bullish on bonds really since Thanksgiving, one of your earlier appearances with us. All right, Paul, thanks. Good stuff today.
All right, thanks, guys.
It's taken longer than expected, but Microsoft finally named a new CEO, a 22-year veteran of the tech giant. Satya Nadella is replacing Steve Ballmer as chief executive. John Thompson will take over for Bill Gates as chairman. Nadella becomes only the third CEO in Microsoft's history. In a letter to employees, he says it's an honor for him to lead and serve the company. But Gates and Ballmer aren't riding off into the sunset. They will stay on the company's board of directors. Gates is getting a new title, technology advisor. In that role, he will devote more time to the company, helping shape product direction. And in a video which was posted on the company's website, Gates says there's a lot of opportunity, and he is excited to have a strong leader in Nadella to take the team through a new era.
And this stock alert for you, JCPenney shares